Investing can often feel like a daunting task, especially when you're bombarded with flashy advertisements promising quick riches and overnight success. But what if I told you that the key to successful investing doesn't lie in chasing trends or trying to time the market? Instead, it's about adopting a mindset rooted in patience, discipline, and a solid understanding of fundamental principles. That's where Benjamin Graham's The Intelligent Investor comes into play. This book isn't just a guide. It's a philosophy that has shaped generations of investors, including the legendary Warren Buffett. So, let's dive into the core concepts of this timeless classic and see how they can transform your approach to investing. First off, one of the most significant ideas Graham introduces is the distinction between investing and speculating. It's easy to confuse the two, especially in today's fast-paced market, where everyone seems to be chasing the next big thing. Speculation is akin to gambling. It's about betting on price movements without a solid understanding of what you're buying. On the other hand, investing is about doing your homework, analyzing the fundamentals of a company, and making informed decisions based on long-term value rather than short-term gains. Graham emphasizes that true investors focus on the underlying value of their investments, not just the price tag. This shift in mindset can be incredibly liberating, as it encourages you to think critically and independently rather than getting swept up in the noise of the market. Now, let's talk about the concept of margin of safety. This is perhaps one of the most crucial principles in Graham's philosophy. The idea is simple. When you invest, you should always have a cushion or buffer that protects you from potential losses. This means buying stocks at a price significantly lower than their intrinsic value. By doing this, you're not only minimizing risk, but also setting yourself up for potential gains when the market eventually corrects itself. It's like having a safety net. It allows you to sleep better at night, knowing that even if things don't go as planned, you've built in some protection for your investment. Graham also highlights the importance of market fluctuations. He famously referred to the market as Mr. Market. Muds, a whimsical character who shows up every day offering to buy or sell stocks at wildly varying prices. Some days he's in a great mood, and other days he's panicking. The key takeaway here is to remember that these fluctuations are normal, and to not let your emotions dictate your investment decisions. Instead, use these moments to your advantage. When Mr. Market is feeling pessimistic and prices drop, that's your opportunity to pick up quality stocks at bargain prices. Conversely, when he's overly optimistic, it might be time to take a step back and reassess your positions. This approach encourages a level-headedness that can be hard to maintain, especially in a world driven by instant gratification. Another vital lesson from The Intelligent Investor is the significance of having a plan and sticking to it. Graham advocates for a disciplined investment strategy, whether that means setting aside a specific amount of money each month or adhering to a predetermined asset allocation. The idea here is to create a system that works for you, and to resist the urge to deviate from it based on fleeting market trends. This is where many investors falter. They let emotions guide their decisions instead of relying on a well-thought-out strategy. By having a clear plan, you'll be better equipped to navigate the inevitable ups and downs of the market without losing sight of your long-term goals. Now, let's talk about diversification. Graham stresses the importance of spreading your investments across various asset classes to mitigate risk. Think of it as not putting all your eggs in one basket. By diversifying your portfolio, you're protecting yourself from the potential downfall of any single investment. This doesn't mean you should invest in everything under the sun. Rather, you should focus on a balanced mix of stocks, bonds, and other assets that align with your risk tolerance and investment objectives. This strategic approach can help you weather market volatility and improve your overall returns over time. One of the most relatable aspects of Graham's philosophy is his acknowledgement of human psychology in investing. He understands that we're all prone to emotional decision-making, especially when it comes to money. Fear and greed can cloud our judgment and lead us astray. That's why he emphasizes the importance of self-discipline and maintaining a rational mindset. Investing isn't just about numbers. It's about understanding your own behavior and making conscious choices that align with your financial goals. By cultivating emotional intelligence in your investment journey, you can make better decisions and ultimately achieve greater success. Finally, let's touch on the concept of long-term investing. Graham advocates for a buy-and-hold strategy, encouraging investors to think beyond the short-term noise and focus on the long-term potential of their investments. This doesn't mean you should ignore your portfolio entirely. Regular reviews and adjustments are essential. However, the core idea is to resist the temptation to react impulsively to market fluctuations. Instead, commit to a long-term perspective and allow your investments the time they need to grow. This approach not only reduces stress, but also aligns with the reality that, over time, the stock market tends to rise despite short-term volatility. In conclusion, The Intelligent Investor isn't just a book. It's a mindset that can empower you to navigate the complex world of investing with confidence. By embracing the principles of value investing, maintaining a margin of safety, and cultivating discipline, you'll be well on your way to becoming a more intelligent investor. Remember, it's not about chasing quick wins. It's about building a solid foundation for your financial future. So take a deep breath, do your research, and approach investing with the patience and wisdom that Benjamin Graham so eloquently advocates. Your future self will thank you.